This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Producer group OPEC and the International Energy Agency, the world's most closely watched forecasters of oil demand growth, are further apart than they have been for at least 16 years in their views on fuel use, according to Reuters research. The gap between the IEA, which represents industrialized countries, and the OPEC means the two are sending divergent signals to traders and investors on oil market strength in 2024 and, for the longer term, about the speed of the world's transition to cleaner fuels. In February this year, the IEA predicted demand will rise by 1.22 million barrels per day, BPD, in 2024, while in its February report OPEC expected 2.25 million barrels of oil per day. The difference is about 1% of world demand.
U.S. crude oil production lead global oil production for a sixth straight year, with a record-breaking average production of 12.9 million barrels per day, BPD, the Energy Information Administration, IEA, said in a release on Monday. In December, U.S. crude oil production hit a new monthly record high of over 13.3 million barrels of oil per day, the agency said. The United States produced more crude oil than any nation at any time, according to our international energy statistics, for the past 6 years in a row, the IEA added. The IEA says it is unlikely that the record will be broken by another country in the near term.
Moving on to the top news in the energy sector.
Oil prices rose in Tuesday trade as geopolitical tensions in the Middle East continued to spur concern, but gains were limited on bearish demand sentiments and as the market waited for monthly reports from oil agencies. Brent futures for May delivery was up 26 cents, or 0.3%, to $82.47 a barrel by 04:08 GMT. The U.S. crude April contract rose 17 cents, or 0.2%, to $78.10 a barrel. While the war between Israel and Palestinian group Hamas has not led to significant oil supply disruptions, Yemen's Iran-aligned Houthis have been attacking ships in the Red Sea and Gulf of Aden since November in what they say is a campaign of solidarity with Palestinians.
India's coal-fired electricity generation scaled a new high in January 2024 as the world's second-largest coal user after China cranked coal's share of the country's electricity generation mix to a record 80%. Coal-powered electricity output was 115 terawatt-hours, TWh, in January 2024, a new high and up 10% from the same month in 2023, data from energy think tank Ember shows. Emissions from coal generation in January hit 104.5 million metric tons of carbon dioxide, CO2, while emissions from all power sources hit 107.5 million tons, which marked a record in both categories and a 10% rise from January 2023. Next, we have the top news in metal markets. China Copper, one of the country's leading producers of the metal, wants to acquire overseas mineral resources amid tight mined copper supply and rising demand, the company's chairman told Reuters on Monday. A lack of rich copper resources at home has driven Chinese companies to hunt elsewhere, with an unexpected supply deficit this year adding to the impetus. We hope to cooperate with countries and companies globally to acquire a number of near-production, at-production mineral resources with good quality, large reserves and potential, Shubo wrote in response to Reuters' questions.
Non-ferrous metals prices fell in London on Tuesday, retreating from gains in the previous session, as investors and traders pulled back ahead of key data in China and the United States. 3-month copper on the London Metal Exchange, LME, fell 0.2% to $8,634 per metric ton by 0226 GMT. Aluminium declined 0.4% to $2,250, nickel decreased $18,305 and zinc dipped 0.3% to $2,558.50. The London prices have been pressured by subdued economic growth outlook, poor manufacturing data and the lack of a big stimulus support from top metals consumer China.
We will now look at the top news in the agricultural sector.
Chicago wheat futures slid on Tuesday, with the market facing pressure from leading importer China cancelling more U.S. cargoes amid plentiful world supplies. Corn lost ground, while soybeans ticked higher, with both markets likely to face headwinds from expectations of near-record South American production. Wheat prices are likely to fall further when you look at production prospects across the Northern Hemisphere, said one Sydney-based analyst. Supplies are going to rise. The most active wheat contract on the Chicago Board of Trade slid 0.1% to $5.46 minus 1/2 a bushel, as of 0316 GMT. Corn fell 0.2% to $4.40 minus 3/4 a bushel, while soybeans added 0.3% to $11.82 minus 1/4 a bushel. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.